Something just snapped in the global economy, and almost nobody realizes how close we are to a full-scale financial shock. Oil prices are climbing again. Tankers are being seized. Warships are moving into position. And right now, in a narrow stretch of water, barely 33 kilometers wide, the fate of the global economy is hanging by a thread. This is the Strait of Hormuz. And if it shuts down, even partially, everything changes. Not just for governments, not just for markets, for you, for your fuel, your food, your daily life, because nearly 20% of the world's oil supply passes through this one choke point, one route, one pressure point, one place where a single mistake could trigger a chain reaction across the entire planet. But here's the part that should really worry you. This isn't just a possibility anymore. It's already starting. Over the last 48 hours, oil markets have reacted sharply. Prices are rising, not because of what has happened, but because of what might happen next. Investors are panicking. Shipping companies are hesitating. Insurance costs for oil tankers are quietly surging behind the scenes. And somewhere in the middle of all this tension, U.S. warships and Iranian forces are staring each other down in one of the most dangerous waterways on Earth. But here's where it gets even more serious, because this isn't just about oil, it's about control. For decades, the Strait of Hormuz has been the ultimate geopolitical pressure point. Iran sits on one side, U.S. naval power dominates the other. And every time tensions rise, the same unspoken question comes back: who really controls this choke point? Because whoever controls Hormuz controls the flow of energy to the world. And right now, that control is being tested like never before. Just days ago, reports confirmed that Iranian forces seized multiple commercial vessels moving through the region. Not military ships, not armed convoys, civilian cargo vessels. The message was clear and chilling. Iran can still disrupt global shipping whenever it wants. At the same time, the United States has ramped up its naval presence. Mine clearing operations are increasing, surveillance is tightening, and behind closed doors, contingency plans are being updated because officials know something the public doesn't fully understand yet. If even one tanker is attacked, if even one mine hits its target, the reaction won't stay contained. And that's exactly why oil prices are moving, not because supply has collapsed, but because confidence is collapsing. Markets don't wait for disasters, they react to fear. And right now, fear is spreading. Think about this for a second. If oil shipments slow down, even slightly, the impact hits instantly. Fuel prices rise, transport costs spike, food prices follow, inflation surges, and suddenly, what started as a regional tension becomes a global economic crisis. But here's the twist nobody is talking about loudly enough. This crisis doesn't need a full war to explode. It just needs uncertainty. Because in a place like Hormuz, uncertainty is more dangerous than missiles. A single warning shot, a single miscalculation, a single aggressive maneuver, and suddenly, insurance companies pull back. Shipping routes get delayed. Tankers start rerouting. And global supply chains begin to fracture, and quietly at first, then all at once. But what makes this moment different from every previous crisis? Why are markets reacting faster, harder, more nervously than before? Why are analysts suddenly warning about a long-term disruption, not just a temporary spike? And why are some insiders quietly saying, this could be the beginning of something much bigger? Because behind the headlines, there are signals most people are missing. Signals that suggest this isn't just another standoff. This is something building, something evolving, something that could turn the Strait of Hormuz from a pressure point into a breaking point. And in the next part, we're going to uncover what's really happening behind the scenes, the hidden moves, the silent strategies, and the warning signs that suggest this crisis is only just beginning. What you're seeing on the surface, rising oil prices, ship seizures, naval patrols, that's only half the story. Because beneath all of it, something much more strategic is unfolding, quietly, carefully, and deliberately. And if you connect the dots, a very different picture starts to emerge. Let's start with the most important question. If there's a ceasefire, if both sides are supposedly avoiding escalation, then why is the tension getting worse? Why are ships still being seized? Why are warships still moving in? Why are markets reacting like a crisis is already here? Because this isn't a pause in conflict, it's a shift in strategy. Right now, what we're witnessing is something military analysts call a gray zone conflict. No official war, no full scale attacks, but constant pressure, constant signals, constant moves designed to test limits without crossing the line into open war. And in a place like the Strait of Hormuz, this kind of conflict is even more dangerous because every action is calculated, every move has meaning, and every response is being watched. Take Iran's recent actions. Seizing commercial vessels is not random, it's not emotional, it's strategic because Iran knows something critical. It doesn't need to defeat the United States militarily. It just needs to make the Strait of Hormuz feel unsafe. That's it. If shipping companies start to believe the route is risky, if insurance costs spike high enough, if even a small percentage of tankers delay or reroute, the global oil system starts to strain. Prices go up, pressure builds, and suddenly Iran has leverage without firing a single missile. Now flip the perspective. Look at what the United States is doing, increasing naval patrols, deploying mine clearing vessels, monitoring every movement in the strait. At first glance, it looks like control, stability, protection. But there's another side to this. Because heavy military presence doesn't just deter threats, it also increases the chances of a mistake. Think about it. More ships, more aircraft, more surveillance, more tension. And all it takes is one misinterpretation, one aggressive maneuver, one commander making a split-second decision under pressure, and suddenly the situation changes fast. This is why some analysts are calling Hormuz right now a trigger zone, not because war has started, but because conditions are perfect for it to start accidentally. And here's where things get even more interesting. Because while all this is happening at sea, there's another battle taking place quietly in the background, an economic one. Shipping insurance rates are rising. Not dramatically, not yet, but enough to signal concern, enough to make companies think twice. Because in global trade, risk is everything. And when risk increases, costs follow. Now imagine this scenario. A tanker company has two choices: route through Hormuz, faster, cheaper, but dangerous, or take a longer route, safer, but expensive and slow. What do they choose? At first, most stay, but as tension builds, some start to shift, then more. Then suddenly supply slows down, not because it's blocked, but because it's being avoided. And that's the real power of this situation. No official blockade, no formal shutdown. But the effect is almost the same. Now combine that with rising oil demand, fragile global supply chains, and already high inflation pressure in many countries, and you start to see why markets are reacting the way they are. But here's the part that changes everything, because some insiders are starting to suggest this might not be temporary. There are increasing concerns that even if no major conflict happens, the Strait of Hormuz could remain unstable for months, maybe longer, not fully closed, but never fully secure. And if that happens, the world doesn't just face a short term oil spike, it faces a new normal: higher prices, more volatility, constant uncertainty. But wait, there's something else, something even more dangerous. Because while all this tension is building slowly, there are already signs that things could escalate much faster than expected, signals that suggest this controlled pressure could spiral out of control and turn into something much bigger. In the next part, we're going to explore those scenarios. What happens if a tanker is hit? What happens if a mine detonates? What happens if one side decides to respond, not with pressure, but with force? And why, if that happens, the oil shock we're seeing right now will be nothing compared to what comes next. Right now, everything is still under control. That's what officials are saying. That's what the markets are hoping. That's what the world wants to believe. But history tells a different story because situations like this don't stay stable forever. They escalate. And the most dangerous part, escalation rarely starts with a big decision. It starts with a small moment, a mistake, a reaction, something that wasn't supposed to happen. But once it does, everything changes. Let's walk through the first scenario. The one experts are quietly worried about the most. A single tanker gets hit, not sunk, not destroyed, just damaged. Maybe it strikes a mine. Maybe it's targeted by a drone. Maybe it's caught in a miscalculation. It doesn't matter how. What matters is what happens next. The moment that tanker is hit, everything stops. Shipping companies freeze movement. Insurance costs explode overnight. And global headlines shift instantly. Oil route under attack. Now think about the reaction. Countries that depend on that oil, Europe, Asia, major economies, but begin to panic. They demand protection, they demand action, and suddenly pressure shifts onto the United States. Do something, secure the strait, respond. And here's where things get dangerous because the US has two choices. Option one, increase protection, more ships, more patrols, more presence. Option two, retaliate, strike the source of the threat. And if retaliation happens, we're no longer in a gray zone conflict. We're in direct confrontation. Now let's go deeper. Second scenario, multiple disruptions. Not one tanker, not one incident, but a pattern. A few ships delayed here, another vessel intercepted there, warnings issued, close calls reported, nothing catastrophic, but enough to create a constant sense of instability. This is actually more powerful than a single attack because it keeps the system under pressure continuously. Markets don't recover, confidence doesn't return, oil prices don't stabilize, and over time, this slow disruption becomes a full economic strain. Countries start looking for alternatives, strategic reserves are discussed, emergency measures begin to surface, but here's the twist. There are no easy alternatives to the Strait of Hormuz. You can't just reroute 20% of the world's oil overnight. You can't replace that supply instantly. And you definitely can't stabilize markets when uncertainty becomes permanent. Now, let's push this even further. Third scenario, the one nobody wants to talk about publicly, a direct military exchange. It starts small, a warning shot ignored, a patrol vessel gets too close, a drone is shot down, and suddenly both sides respond. Not full scale war, not yet, but targeted strikes, limited engagement, controlled escalation. Except control in a situation like this is an illusion because once force is used, it creates momentum. Pressure to respond, pressure to show strength, pressure to not back down. And now, every move becomes bigger than the last. Naval skirmishes, missile threats, airspace violations, regional forces getting involved, all centered around one narrow stretch of water. And here's the part that connects everything back to you. Because while this is happening, oil doesn't just rise, it spikes, not $5 or $10 increases. We're talking rapid jumps, $20, $30, even more in a short period. And that shock doesn't stay in the oil market, it spreads fast. Fuel prices surge globally, transport costs skyrocket, food prices rise, air travel becomes more expensive, industries slow down, inflation returns stronger than before. And suddenly, what started as a regional tension in the Middle East becomes a global economic crisis. But wait, there's something even more unsettling because some analysts are warning that even if none of these scenarios fully play out, even if there's no major attack, no direct confrontation, no full escalation, the damage may already be happening. Because once markets lose confidence, once shipping companies start adjusting behavior, once governments start preparing for worst case scenarios, you don't need a disaster. You just need the belief that one is coming. And that belief is spreading right now, quietly, but rapidly. So the real question isn't just what happens if things escalate? It's this: what happens if the world starts behaving as if escalation is inevitable? Because if that shift happens, then everything we've talked about so far is only the beginning. And in the final part, we're going to break down the biggest consequences of all, what this means long term, how this could reshape global power, and why some experts believe the Hormuz crisis could trigger a chain reaction that changes the global order itself. Because this isn't just about oil anymore, it's about what comes after. If this continues, not explodes, just continues, then what we're looking at is not a temporary shock. It's the beginning of a shift, a slow, grinding transformation that most people won't notice at first until it's already changed everything. Because here's the truth no one says out loud: the Strait of Hormuz was never just an oil route, it was a symbol of stability, of predictable flow, of a global system that, despite conflicts, kept moving. And now that symbol is cracking. If uncertainty in Hormuz becomes permanent, if ships keep getting delayed, seized, threatened, if insurance keeps rising and routes keep shifting, then the global system doesn't collapse overnight, it adapts. But adaptation comes with a cost. Countries start thinking differently, not about profit, not about efficiency, but about survival. Energy security becomes priority number one. And when that happens, everything changes. Nations begin stockpiling more oil. Strategic reserves expand. Emergency agreements are activated, and behind closed doors, allies start asking a very uncomfortable question. What if we can't rely on this route anymore? And that question leads to another. What if we can't rely on the system anymore? Because for decades, the global economy has been built on one assumption that critical trade routes like Hormuz would remain open, protected, stable. But now that assumption is being challenged. And once doubt enters the system, it doesn't leave easily. This is where the long term consequences begin. First, energy alliances start to shift. Countries begin securing direct deals. New partnerships form, not based on politics, but on access, on reliability, on control. Second, alternative routes and sources become urgent. Pipelines get prioritized. New infrastructure is planned. Even expensive, inefficient solutions suddenly become necessary because when stability disappears, cost stops being the main concern. Third, global power dynamics begin to move, slowly at first, then more visibly, because control over energy doesn't just influence markets, it influences influence itself. Whoever can guarantee supply, whoever can protect routes, whoever can reduce dependency gains power, real power. And that brings us back to the United States and Iran, because this crisis isn't just testing military strength, it's testing control, influence, credibility. If the U.S. can keep Hormuz open, it reinforces its position as the protector of global trade. But if instability continues, if disruptions keep happening, if confidence keeps falling, then something much bigger starts to shift trust. And once trust in a system breaks, rebuilding it is far harder than protecting it. But here's the most important part of all, the part that connects everything together. This situation doesn't need a dramatic ending. It doesn't need a massive war. It doesn't need a single defining moment because the real danger is not the explosion, it's the slow burn, a constant state of tension, a permanent layer of uncertainty, a world where critical systems are always at risk. And in that world, prices stay higher, markets stay nervous, decisions become more cautious, growth slows, and gradually, without a single headline declaring it, the global economy becomes more fragile, more reactive, more vulnerable, all because of one narrow stretch of water where tension never fully disappeared. So when you see oil prices rising, when you hear about another ship incident, when markets react suddenly, understand this. You're not just watching a temporary crisis, you're watching a shift in real time, a shift that could redefine how the world moves energy, how nations build alliances, and how power itself is measured. And the most unsettling part, we're still at the beginning. Because if the pressure keeps building, if the signals we've talked about continue, if confidence keeps slipping, then what comes next won't just be an oil shock, it will be something far bigger, something the world is not fully prepared for. And by the time everyone realizes it, it may already be too late.